On Friday, we had a rising wedge for the S&P 500. We closed below that level. Was today nothing more than a valid retest of that level, and we're about to go start on the way back down. We're also going to talk about these three scary headlines that stocks right now are simply ignoring. Now, last night when the futures markets opened, you can see price open up right here. What do? We filled the gap and we continued to rally up all day long. It wasn't until later in the afternoon when we got any semblance of a small retracement in this market. Now, when we come over and look at how the indices fared across the board today, the Dow was up 317 points. The Nasdaq was up 294 points. S&P 500 up 56 points, with the Russell 2000 up 1.88. We come over and look at advancing the issues versus declining. We had 67.1% of issues advancing on the day. Then when we come over and look at the sectors across the board, technology by far outpacing everything else. And the weakest out there was energy. So if we come over and look at a chart of energy, we can see last night, crude oil actually made a high all the way up here at 77.53. Crude oil today was down 2.26%. And with crude oil going down, we also come over and take a look at gold. Gold was also on the move down as well. After gold has completed this ABC pattern on the way up, we now today get a bearish engulfing candle. Is this nothing more than a fake out and we're going to run back to all-time highs? Or is gold going to make its way down for another retest of this trend line that we already broken out from? Now today we've seen a headline right here. Iran privately stated they want to resume talks with the U.S. and they are signaling they want to de-escalate hostilities out there. And what do we see? Absolutely, crude oil getting destroyed on the way down. Gold getting destroyed on the way down. Now, something we do want to pay attention to in the coming days, if we see gold starting to rocket up, if we see crude oil starting to rocket up, that's going to be a clear indication that tensions in the Middle East are starting to bubble up even more so. Then we come over and look at this article right here. Why are markets ignoring scary headlines about Iran, trade wars, and the U.S. debt? Well, if we look right over here, if we look at number one, why are they ignoring the threats between Israel and Iran? Well, basically, it's this simple. The U.S. now is a net exporter of oil. So unlike back in the 1970s, we are not as reliant on it. However, that doesn't mean that if Iran blocks off the Strait of Hormuz, that we're not going to see crude oil going up. That will not infect it, that will not cause problems with inflation. Then we look at number two, and that's going to be, what about all the tariffs and such? And that's going to boil down to four letters. Taco. Trump always chickens out. And that's what the market is basically betting on, because we can see right now, July 9th is the deadline to where that 90-day pause is going to end. And I got to be honest with you, we have not seen a flurry of deals announced. We've seen frameworks and such, but we have not seen a deal. So the market's basically betting Trump's going to chicken out. He's going to go ahead and soften his stance, and he's going to push the deadline out even further. Let me know in the comment section down below. Do you think Trump is going to push the 90-day pause deadline even further out in history? Then we come over and look at what could be one of the most important headlines out here, and that is going to be the fact that the U.S. deficit, how much spending do we have? Now, something we do want to pay attention to. Right now, the bond market is shrugging it off, but something we do want to note is if we watch the 10-year yield, if we see the 10-year yield getting back above 5%, that is the point in which the market's likely going to freak out. And keep in mind, we have this ABC pattern in play, which already has been validated, which completes at about 4.86%. Now, just like with any other pattern out there, no one pattern is 100% guaranteed. Patterns get busted every day, so there's no guarantee we're going to make it up there. But if we do see the 10-year yield rocketing up towards that level, that is going to be something we most certainly need to pay attention to. And then we look at some news that we had coming out today. Markets rapidly evolving towards positive outcome in the Middle East. And that kind of alludes back over to that chart that I showed you guys, where Iran basically wants to come back to the talking table. They want all the hostilities to simmer down a bit, because right now it's not looking good for them. They've inflicted some pain on Israel, but Israel, at least by the news articles out there, and again, take it with a grain of salt, appears that Iran is taking the brunt of the force out there. Then today we got more news out here. New York Empire State Manufacturing Index plunges, signaling worsening conditions. And again, this is horrible out here. If we come over and look at the actual number that we had out here today, look at the Empire State Manufacturing. They're expected to come in at negative 5.9. Previous reading, negative 9.2. We came in at minus 16. That's absolutely horrible out there. Now, tomorrow, we do have core retail sales coming out. And let's not forget, Wednesday, we get the weekly unemployment claims And it's going to be Jay Powell's time to shine. I'm sure he's going to be asked plenty of questions about what's going on over in the Middle East. Now, I do want to make you guys aware of 3 amazing prop firm deals out there. Apex Trader Funding, 80% off all their valuation accounts. Pass in as little as 1 day. Use the link in the description box down below. Use promo code Mike. Then My Funded Futures, one of the most creative deals out there. Buy an evaluation, pass it, and get an evaluation for free. And again, new users, you can still get 50% off any new evaluation account you buy. Again, promo code Mike. Last but not least, Take Profit Trader, 30% off all your evaluation accounts and no activation fee. Now with this one, you have to use promo code Epitome. And again, all links are in the description box down below. So now as we come over, back over at the SPY, we got to ask ourselves, is this nothing more than a valid retest of the trend line, or are we getting ready, or was Friday nothing more than a fake out and we're getting ready to run back to all-time highs? We are not that far away. One thing I do want you guys to note though, look at how high the MACD indicator was with the peak over here as to where we are now. As the market came up and pushed above this peak, the MACD indicator simply did not confirm that move. Does not mean we cannot go higher. On the 4-hour chart, MACD indicator trying to drift down towards the 0 line. And again, you can see we're still below that lower trend line. Then when we come over and start looking at the 30-minute chart, look, last Friday, we had that massive gap on the way down. Today, we get a massive gap up and we fill the gap from Friday. Then we pull back slightly here just a bit. Now, one of the areas I do want to watch, and we talked about this today on the live stream. If you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Today, we gave away a Take Profit Trader account live on stream, and we have more accounts to give away this week. But this is one of the areas that we wanted to watch. Do we come back to here, and does this hold as support? If so, then that's going to set up a much larger ABC pattern on the way up. Now, if we draw that out, we grab the Fibonacci extension tool, we measure the A to B leg, the B to C leg, and then we project up here for D. That would bring us all the way up to 610. If we come over and look at where that completes on the daily chart, that is right near all-time highs in this market. However, if we start breaking down below this area, we really want to turn our attention down towards gap support at about 600.28. Then see, can we come all the way down, fill in the gap at about 596.92? We breach below that. Can we make it down to fill in the gap from not this past Friday, but the Friday before at 593.01? Now, as we come over and look at the futures markets real quick, let's look at the 4-hour chart on the ES. Notice what we have. We basically had a double bottom. Bottom 1, bottom 2, the market rocketed on the way up. Now, if indeed we're going to treat this as a double bottom pattern, where does that actually complete at? The price completion would be all the way up here at 6178.75. Now, I do want to warn you guys, this measurement is on the September contract. I've already rolled over my futures contracts. You can also see that we talked about this as a high probability target in Sunday's video, 6,060.50. I said within the next 1 to 2 trading sessions, we're going to take that out. We already hit that level today. We hit the point of control. We hit value area high, and now we're below it. So from a weekly perspective, as long as we're below 6,098, then that point of control then becomes another target. We breach that. We're back down towards value area low. Then we're turning our attentions back down towards the lows and then maybe down towards these high volume areas. Again, this week, we do have volatility potentially on Wednesday with the Fed coming out. Then we come over and look at the daily profiles on the 30-minute chart. Today, we had a P as in Paul shaped profile, and notice where was a majority of the volume built out? We can see right here on the profile, a majority of the volume was built up in the upper portion of the range. Now with the P-shaped profile, if we start breaking below value area low, we expect the market to come back and revisit the lower third of the range. Now I'd bring that right back here towards the swing point at about 6,047.25. So if we break below value area low at 6,081.75, I then want to turn my attention with runner targets down towards here. But one thing we want to be cautious of, if we break value area low and then we start coming back up, I'd want to target that point of control, 6,090.75. Then I'd have the next target, 6102.25. Anything above and beyond that, I really would have to confirm. I really want to come back over here to the 4-hour charts and start looking at the possibilities of hitting that double bottom target at 6178.75. Now we come over and look at the QQQs, a little bit different than what we saw with the S&P. With the S&P, we're still below that lower trend line of that rising wedge. With the Nasdaq, we got back into that range. MACD indicator basically flatline. We are well above the 0 line. On the 4-hour chart, you can see how we push back into the range of that rising wedge. But then we look at the 30-minute chart. Here was a structure area we talked about in Sunday's video. I said if we hold a value area low and we get above the point of control, the next target will be value area high, and then this structure area right up here, we sliced right through that and we filled the gap. Now the question is, we have this upper level consolidation. Is this distribution, or is this accumulation for the run back towards all-time highs? Tomorrow, if we're staying above value area low at 533.57, I want to give the bulls the benefit of the doubt that we're going to run all the way up to all-time highs. If we start breaking below value area low, then I want to turn my attentions back down towards that structure breakout point we broke out from that we have failed to come back and test. That structure breakout point is going to be anywhere from 531.96 to about 531.31. Now, when we come over and look at the futures markets real quick, notice not only were we able to test value area low on the very first day, but we had a full complete volume profile rotation on the weekly chart. We got all the way above the weekly value area high at 22,195. Then we came back below it. As long as we are back below 22,195, I want to turn my attentions back over here towards the point of control. And notice every single one of these candles from Sunday night all the way until the close, every single candle has closed higher than where it opened up. That's 1, 2, 3, 4, 5, 6 consecutive candles that closed higher. Is not that far-fetched. Then if we pull a Fibonacci retracement, assuming the high from today holds and we don't start breaking right back above it, that 38% retracement, which is near the weekly value area low, would be a logical target, 22,033.96. We breach that, then I'd want to turn my attention towards the point of control, about towards 21,975. And then do we maybe even come all the way down towards the 61.8? Now, if indeed we do start to pull back from here, that could then set up a much larger A to B equals C to D pattern, and then we'd see where that pattern would actually complete at. We need to see the turn here. Then once we start coming down, we'll start to map out where that could take shape. And if you guys follow me on, if you guys join me on the live streams, I'm sure we'll be talking about that during the streams. Now, if you want to understand Take Profit Traders drawdown, then you want to make sure to check out this next video right here.